So, hi guys and girls. Today at Blocktalks, we have an amazing guest who has been a perfect intersection of VC ecosystem, startup, and how you find good startups and do the investments. She has started her journey from food tech and now into Web3 and into Web3 DAO investor. So it's a like a very small niche there. So she has created she has find a way to find good founders who are doing really good projects and everything. So yeah, presenting you Mona. Hi Mona.
Hi, thank you for having me.
So my first question would be, you started as a food tech, ed tech, and then Web3. So what's the motivation? Like because food tech is totally different, ed tech is somehow related to it. Then Web3, and what's the common thread? Like what do you think, or like what was the skill which moved, which helped you to sustain all these three roles?
Yeah, so maybe just a little rewind, it'll make sense to explain the question. But essentially, I studied in the UK and I worked as a strategy consultant at a really big company for 4 years, where I actually quite enjoyed my consulting life. However, I also wanted to do something with a little bit more impact and a little bit more entrepreneurial spirit. So I went back to Germany and I founded the German entity of an education technology startup. And I really enjoyed doing that. But essentially, I had grown that across the DACH region, which means Germany, Austria, and Switzerland, and decided I wanted to do an MBA to kind of enhance my skill set a bit further and be able to scale the company more. And in that process, I actually went to INSEAD, an MBA school in Singapore and France. And during the time I was there, the pandemic hit. So things got a lot rockier and the business really broke down to quite a large degree. We were able to rebuild it on at a later point, but at that point, it was not particularly well received because it was actually helping students to study abroad. And of course, during that time, there was not a lot of travel or even knowledge of how future travel is going to look. So that's when I had a lot of time during my MBA, and I did come up with an idea around a food tech business, which I also launched because I wanted to see where that goes, which was really more had nothing really to do with the ed tech business. It was just more of an opportunistic idea. And that kind of started to, progress and move on. But I still graduated during the pandemic. So, of course, there was a need also to, figure out what to do with a big loan and lots of things to pay. And, of course, also to survive. So I had been exposed to the Web3 space on a personal level, just kind of dibble dabbling in investments a little bit, and realized this is actually a really interesting space, and took up a role in the Web3 space with a German fintech app that was enabling cryptocurrencies investments. And that's kind of how my journey into the Web3 space started. Given all the things I was doing, Web3 to me has the biggest potential, the biggest like innovation potential, and change impact potential going forward. So I decided to focus my energy on that, and ended up combining a lot of the skills I learned in my consulting years as well as my entrepreneurial years in then a venture capital career, because I really felt like all of the skill sets I learned on both sides of the fence were really kind of funneled and valuable in a VC career space.
Yeah, it's good to know like how you converted that like bad time, like when the COVID was there, into something different, which come to you as another opportunity. So you said that you have been into a founder role, now in a VC role, and a consulting role also. So how you manage the switch, like because these are the three different minds. Okay, so like let's suppose right now you are doing VC investments in Web3. So how those roles help you? Like any specific example which like you are saying that it helped you, but I want to know how it helped you, like any a specific example.
Sure. Yeah. On from a consulting background, what I learned there was really to analyze data and look at different ways of expressing business models, understanding what is important within executive roles, understanding market segments and how to um, size markets and really understand entries into markets, competitive advantages, because that was a really big part of what I had to do with regards to analysis and PowerPoint presentations for the consulting role. And in the entrepreneurial space, working in education as well as food, as well as Web3, I learned more what hands-on decision making means, how to build a startup from the ground up, not just to analyze it, but actually also to face the everyday challenges of fundraising, of managing people directly, of actually thinking about a business idea that has traction going forward, thinking about longevity of the business, right? All those things. And so VC actually requires you to have all of those skill sets to some degree, right? Because you need to be analytical, you need to understand business plans, business models, market sizes, also, how the organization is set up. And then from an entrepreneurial perspective, you can actually relate more to the founders. What are their problems? What is actually, really difficult to manage for them? How do you grow a startup, right? What are the different stages of a startup? So having both of those skill sets slash exposures across my career hopefully makes me a much better VC investor.
Nice to know that like how you are keeping the old experience and improvising that to like audit the founders and the current roles. So you have been to Harvard, you have given some lectures in Oxford and other big companies also. So as per your experience, what are the three mistakes you found in different founders? Okay, they are doing this repetitively.
Yeah, so one of the things that you will also notice that I have done, which I think is something that happens quite easily, but it is really something to think about as a founder, is not committing 100% to your business. Because what happens, and what has happened to me, is having to bootstrap a business, having to figure out the financials at the beginning with no funding is really tough. So you do other things on the side, right? In order to kind of make sure that you can sustain yourself. It makes perfect sense. I did it. I didn't really know another opportunity. But what I've found over the years is, if you want to be a founder, this is not an easy road, and it requires 100% commitment, and it requires 100% of your brain space, your time, your effort, your energy. So doing lots and lots of things at the same time, or trying to start a startup alongside a really demanding full-time job, is genuinely going to be very difficult for you to build a sustainable long-term project, and also make sure that you keep up with the speed of changing innovative markets, because you are distracted for over 50% of your time with another thing that occupies your life and your brain space. So that's number one. Number two, what I often see is that founders get really, really excited and sucked into their business idea, which is great. You need to be that, right? Because you need to have the power to fight for it. But they are not flexible, not willing to pivot, not willing to adjust based on like market conditions or feedback. And that often is causing a little bit of that delay in terms of their, progression, which sometimes means competitors will come in and take your market share, take your customers. And I understand that, because, of course, you are building this business or thinking about this business for a good reason. And sometimes you are right, right? So it's, of course, also not every feedback is good feedback. So it's important that you have a clear opinion, but it is also important that if you do get feedback, or if the market does change, or if there are certain new parameters, new market entrants that you need to compete with, that you actually analyze that and build that into your thinking in order to be flexible, to adapt, to specifically ever changing innovative markets like in the Web3 space. Um, and that kind of leads to my third issue as well, or third, thing that I've seen, which I think is a little bit of a problem, which is if you are very hard to coach and extremely defensive as a founder towards what you're building, that often is difficult for investors to fund you, right? Because investors, and as a founder as well, you can think about it as you're kind of marrying that investor or that person, and you're going to be working with them and in contact with them for 5-10 years, maybe not always the same person, but the firm. And therefore, the issue is you need to get along to some degree, right? And you need to gel. And sometimes founders essentially are quite desperate and they just take any money in, right? And then they don't double check if they can actually work with the investor, because not all investors are great to work with. And then sometimes the investors are also really analyzing if they can work with you as a founder, because maybe you're not very coachable, or you're not willing to listen, or your communication skills aren't very strong, so it's hard to discuss things with you, which could also be an issue why they actually don't invest, even though your idea is very good. So keep that in mind, right? This is still very much in the early stage venture, is very much a people business as well.
Got it. So 100% commitment. Second one is the flexibility. You should be flexible to move around with your or pivot as per the market
Mm-hmm.
condition. And third one is the you should be able to adopt, or you should be able to train or get the inputs and absorb those inputs and work around that. So yeah, cool.
Yeah. And keep in mind the people aspect as well, as a founder as well, right? Because really important that you choose investors that you like.
Yeah, cool. So it's kind of a matchmaking. It should be a matchmaking between both the parties, not invest like
Yeah.
don't take any money which is there for you. Just see how that money plus some knowledge or some extra skills which you can get it from that ecosystem. Yeah. So from this question, we are coming to the like Hydra Ventures, the investment wing
Hmm.
where you like invest more of like all the time of your, and what sort of vision that Hydra Venture has, what sort of investment they do, and like what sort of founders they select. Just give us a brief.
Yeah. So my main investment role is with a company called Tokentus. We're a publicly listed entity on the German stock exchange, which is backed by the German banking network. And part of our portfolio is direct investments into companies, primarily pre-seed, seed, Series A, sometimes Series A extension, into what I call financial services Web3 infrastructure. Due to the banking network closeness in the German ecosystem, we can provide a lot of value there. But we also do fund of fund investments, which means we invest in other funds. And one of those fund of fund investments is Hydra Ventures. Therefore, I am an investor in Hydra Ventures, by extension through Tokentus. And I'm also an active DAO member within Hydra Ventures, which is a fund of fund investment DAO. So, what does that mean? Very complicated, I know. It means that we essentially, as a big team of, very, very strong investors, summoned by 1KX, Meta Cartel Ventures, Thing3, so really OGs in the space with a lot of knowledge and connections, have come together and have actually decided to build a fund of funds that only focuses on DAOs, and specifically investment DAOs. So we look for strong investment DAO founders that come to us with a clear vision. For example, I want to build an investment DAO around a particular ecosystem, right? Because I truly believe that the Potenzer ecosystem is going to be the next thing. Or I truly believe that digital art, right, is very, very up and coming, and a lot of opportunities are there. And I have extreme expertise in that space. So whatever it may be, we then help incubate these investment DAOs. So help with legal structuring, help with hiring, help with fundraising for these investment DAOs. And then also, essentially, of course, are investors in these DAOs, and back those particular emerging managers of these DAOs within their specific niche in which they invest. So it's a really interesting model because Tokentus, the fund I work for, is an investor in Hydra Ventures. And I am part of Hydra Ventures in the incubation team, which essentially looks for other investment DAOs to incubate and invest in. So, yes, definitely unusual, but really, really interesting because it is very unique model. A lot of very clever people work within the Hydra Ventures ecosystem. And we actually get to spend a lot of time with great people who are very, very well versed in their particular niche, which is, of course, extremely strong to find very good targets.
Got it, got it. It's a very complex system, but I got the idea. Like you invest in those funds, which major role is to invest in other funds, so that like I because it's mostly the vetted, like the vetting part for startups will be very easy for you because they are coming from different layers once they come to you. Yeah. And like we discussed about investments. My next question would be, when being as a Web3 investor, you have seen too many overhyped things and too many underrated things. Many founders comes with blah 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 ideas like which are really high mean conflict. There are many shits. What was the two most overhyped thing which you know that doesn't make any sense, but it exists in Web3 and people are investing in that. And what are the two underrated thing which you should people should focus on these things also in Web3 ecosystem which are really underrated right now.
Yeah, I think one of the things across my career that I thought was generally quite overhyped were all those PFP collections, random cats, random penguins, random. There are, of course, some collections that have built incredible community and are really status symbols within the industry. But imagine all those hundreds of thousands of projects that were just generating money and giving you a digital image which had really zero value. And there was obviously a huge hype, right? In the 2021-ish time, 2022, where people were just investing like crazy into these NFT collections, which pretty much all besides like 2 or 3% went to zero. And that's quite interesting because that is also replicated, in my opinion, in a different way in this whole meme coin aspect, which again, some really strong communities, some really strong spaces that are built around some of these meme collections and meme coins. And obviously, we have some top 200 coins which started out as meme coins or still are meme coins. So not against the actual principle necessarily, but what I think is massively overhyped is those hundreds, millions of meme coins that are just launched for a quick buck and a immediate basically rug pull right to the general public. And that has been a hype where so many billions of dollars have flown into but generated really no value besides lots and lots of losers and no sustainable value within the ecosystem, and in my opinion also have caused a lot of retail to enter the space and then lose and then leave the space again, which for some of the more fundamental projects is, of course, very, very difficult to sustain because we don't have enough retail coming in and actually winning and actually enjoying and actually understanding the space because they keep on, falling into traps of rugs, really. What I do think is both on the NFT collection and the meme coin space, cultures can be created, very, very strong movements can be created and they can be used for good. They can build something that has some value, but it's a minute percentage. Most of it, in my opinion, is really actually hurting the industry much, much more than it is actually building it because, a lot of these are also quite vulgar and things that are just not really respectable in the grand scheme of things for bringing in more people and teaching them about how valuable blockchain technology can be to power so much more than just, cats and dogs on pictures. And I think that's, to me, where a lot of this overhyping happens. It's very much gambling. It's very much speculation, in my opinion. And then where I think we're not really looking enough is actually some industries, right? Take, for example, the travel industry, take the publishing industry, and many, many others, but just as examples, where you have strong founders who have built digital innovations in these industries and have identified areas where blockchain technology could really further support and further create value within a specific, problem within that industry, right? May it be price, may it be cross-border payments, or may it be something more innovative, like just creating efficiencies of data, right? Management of sorts. And here we're actually not putting enough, you know, focus on, because we're focusing so much on the quick buck and the quick exit. A lot of those will obviously be more non-token equity investments, which have a slower burn and the traditional venture capital risk, but are probably actually able to sustain or create some long-term value. And I think that's an area where we need to look into a little bit more. What can blockchain technology actually do in some of those more underlooked industries that are not super prominent in the Web3 space right now, to make them much more efficient and actually maybe build rails that power industries and really, really generate huge amounts of revenue that is not just limited to the native Web3 space, but actually opens up the doors to the world of digital users. And then secondly, I also think that there's a huge opportunity, in my opinion, also in emerging markets, because there's a lot of need for creating more efficiencies, enabling exchange rate fluctuations not to completely, ruin any kind of money that is received from abroad or sent abroad, etc. And of course, there's a lot that's being built there right now, and people have identified this a while ago as an area. But my genuine, really, really genuine reason why I joined Web3 was actually because banking the unbanked was something that genuinely really resonated with me. And I thought, this is great, right? Because there are a lot of people that don't get a bank account, and it's very unfair, and they're completely eradicated from the financial system. Also, maybe they just don't have access to the education, right, or other things. Whereas through blockchain technology and things as, payment infrastructure cross borders, a lot more access can be created to make it a little bit more equitable for everyone to participate. And I think that's something that is where we actually, with that mindset, need to look a little bit more.
Definitely, definitely. This will happen because in 2016 there was ICOs, STOs, IDO. Like this, the phase of and the speed of these rug pulls and scams are the faces are being changed,
Yeah.
but they are happening again and again with different names. And now people are getting smarter. They got to know, okay, this is a scam. So yeah, there are people
Yeah.
who get into this sort of rug pulls and all, but slowly, I think within next 5 to 6 years or maybe 4 years, people will get to know, okay, this is the real use case of blockchain. If you want to build anything,
Mm.
focus on this. Rest other than is like, don't even try to think about, because every sort of rug pull is being pulled by them.
Yeah.
So that's the thing. And yeah, you discussed about culture. My next question would be, culture is related to community, and in Web3, there is a war between which approach a founder should take, a community first or a product first, because they build the product in the later stage. So what do you think about on this thought, like community first approach and product first? How a founder can keep a balance?
So I think what we've been seeing when we've started to analyze some of the, let's call them ICOs or recent launches, is that actually focusing on community in the sense of just bringing KOLs or Twitter influencers, etc., into the project to during the launch week or in the just before the token launch, to push the project, right? By tweeting about it, doing YouTube videos on it, etc. And actually, if we look at the data, it actually shows no statistical link that this actually works, right? There's actually no real link that long term the project has any value. It might have a spike so that people are aware of this TGE, but really nobody actually understands what the project is building or is believing in the long term vision. They're just trying to do a quick flip. And that is definitely not ideal. I think some pre TGE engagement that is over a longer period of time and more genuine may have an effect positively on longer term returns, but overall building a product, in my opinion, that has, you know, real value to people, enables real engagement because people actually like trading with it, they like using it, they like engaging with it. Maybe it helps them save costs within their, you know, platform if it's a B2B related product, whatever it may be. I think that's actually really, really important. So I think having really mind share that is built genuinely, be with a strong product that people want to use, and then launching it and creating like an excitement about it is actually the best way of doing it, right? So you can't ignore community, because Web3 is a very strong community driven industry, but you also have to build a product that people actually understand, want to use, see the value in. And we can argue on pump.fun a lot, but essentially everybody in this industry, I will argue, at least has heard of it. Many of us have used it, or at least looked at the platform once or twice, or have received a link from a friend to say, hey, look at this, right? And so there's some sort of an engagement with it. We can argue a lot about if this is good or bad, but essentially it is a product that people have used before, you know, it TGE'd, and before people are speculating on it. So I think, you know, building a product that actually brings value and users that are excited about it, that then therefore builds community, and that therefore has some potential for longevity. Otherwise, sadly, what we've seen, and I'm sure many of us got burnt, including myself, is that, you know, things go up. If you don't immediately sell because you actually believe in the product, the token will drop at any case, and it has very little chance of revival.
Yeah, yeah, like this is the real core, and this should be highlighted to every founder. Don't try to build the that TG hype with different KOLs. Don't invest or burn your money just to get the price pumped up and get out of that moment and all. Either you can focus on a long-term strategy which will give you a long-term runway. Yeah, that's good. That's good. Uh, Other than this, let's jump on the personal side of Mona.
Sure.
Let's suppose you are 5 years back, and you have like $1 million with you as a fund. What would be the two startups where either you will invest or you will like build it as an entrepreneur? What stream will you
Mm.
choose? Like will you go as a investor or a founder? If founder, what would be the project? And if investor, what would be the?
Okay. So it's a really good question. I think there's a lot of answers that I could have here. I think one of the clear use cases I do see is actually creating, you know, payment infrastructure that enables, you know, crypto payments across the world, also in a regulated fashion, so we can bring institutional usage to it, and also in just enable blockchain technology to be seen. I think it's a lot of it's about perception and understanding the power and value of the technology itself and all the building blocks within the tech stack. And I think that is a very easy use case. So 5 years back, I think I would have liked to have been part of building these rails and having an impact and promoting them in the right way without actually too much of a decentralization being lost, but also understanding that you need to make the wider audience, the regulators, the institutions see that there's a lot of like usage and safety around using the technology in order to enable payments cross borders, in order to enable much faster rails, rather than our massively outdated and extremely centralized and very corrupt in some ways banking system that we do have. And So I think that's the lowest hanging fruit. And again, as I mentioned earlier, this was also the reason why I joined Web3, because I really thought, okay, this can make an impact that not just impacts the super rich, but it can also actually make an impact to people who sadly are excluded from any financial system in the current way of working. And that's, in my opinion, just unbelievably unfair. And that's something that I felt like you could actually help with. um of course, it's not super amazing, but it's a starting point, right, to
It's
just have some
essential.
impact that can be
Yeah,
positive.
it's not like super amazing, but it's essential, and the impact will be huge. There are different apps, but no one knows how much reach they got, like what impact they can. Because if you can get a bank account to someone who has never tested that like use cases of banking and everything, it makes lots of different. Like in today's space, today's world, also like there are people in across the world who don't have access to banking. So
Right, right.
that's a huge thing.
and and even say, not necessarily creating a lot of pitfalls for new users, but actually just having a place to receive money from
Yes.
another space, which allows them to work for an entity or a person that is not in their direct vicinity, but therefore enables them to just have an income stream or an ability to feed themselves, their families, build something, right, that is not just restricted to an immediate cash boundary within their immediate surroundings. And so that's, I think, quite exciting, because if we can get there and do this in a way that makes sense, and that's really hard, right? But from the core premise, I think that's what I definitely, I think, would have loved to do. And I don't think I would have, back then I didn't have necessarily the courage, the knowledge, but now I'm hoping to help fund at least other projects that have that knowledge and that reach and that ability. So definitely looking within that space. And I think funded probably would be a similar answer, but I think there's also a lot in the artificial intelligence space. That's also an overhyped thing that is often slapped onto pitch decks. Oh, I'm working with AI. So I don't mean that, but I do think that no matter if you like it or not, artificial intelligence is having a massive impact on our lives, and it will exponentially do so over the next several years. So making it more secure, enabling proof of workflow, understanding the sources, enabling a little bit more of looking into the black box of AI and the data that is used there and the biases that it might also create, as well as, potential um, more difficult scenarios of taking over and creating a lot of risk in the space. I think we can actually utilize blockchain technology incredibly well, because it's a transparent ledger of data that is you can't mess with that. And therefore, kind of decentralizing I still think is a very interesting use case. And I think there needs to do much more research needs to be done. And again, a lot more bigger players need to be on board with this, which brings its own challenges. But it actually could save a lot of headache, in my opinion, to just make artificial intelligence a lot more transparent and create a lot better data management for some of that data and those algorithms that are very hard to understand for pretty much everyone besides a few folks.
Got it, got it. So first one would be creating a like a Web3 banking for all, and second one will be decentralizing the AI ecosystems so that we can control, like the control is not in the hands of some people. It should be decentralized. Yeah, very nice ideas. And last question will be, uh, you have been into this space from these many years. Like you go to different pitch decks on daily basis and all, and you also you have been into Singapore, Dubai, Germany. So while working with your work or with the pitch decks and all, there would be a time where you have self-doubts. Okay, uh, I am doing right, or this is right, or what. So how do you deal with that? Because that for founders or for people also like who are into jobs and also they face this sort of thing. Okay, am I doing right thing? I left that part and now I'm doing this, which is not, which is eventually it will be a rug pull. You know in the heart like this will not make any
Mm.
sense. So in those cases, how you motivate yourself or how you tell, okay, no, this is the right way and this is the thing.
Yeah, it's a good question, and honestly, it doesn't always work, right? It's not a secret formula, but one of the things that I often have doubt, right? And I have not all of my startups have been successful. The food tech startup didn't go anywhere, and definitely not everything I've done has been super successful. But what I have learned, and that might sound very maybe a little bit mystical or too much, but I think what I have learned is every challenge, every failure has actually been a really strong opportunity for growth and for learning. And without the failures that I've gone through, without the mistakes I have made, without the harsh feedback I have received, I would not be where I am today. And I would not now have the opportunity to keep growing, hopefully, and actually welcoming challenges, welcoming failures, welcoming issues, because I know that they will help me grow and that they will bring me to something much better, because I have so much to learn. I don't know anything, right? I know nothing, but that's okay, because I want to grow, I want to learn, and I'm curious. And if everything always works out rosy, and if you always know exactly where you're going, and if you never make a mistake, good for you. But you're also missing out maybe on some growth opportunities, and on some grounding sometimes as well. It's really good sometimes to be like, "Oh, I'm just a tiny little speck in this universe," and that's okay. And I think that's really, really important to just keep thinking about the fact that, like, hey, it's okay, because I can grow from this, I can learn from this, and next time I'll just do it a little bit better, or different, right? I'll use what I've learned and make a bit different impact. And I think if you have that mindset, if you can try to cultivate that mindset, then a lot of things are not that scary anymore.
Yeah. So like keep the improvement rate, like at least improve 1% daily or weekly. So eventually you will improve a lot in a longer frame of time. Yeah, that's nice. Nice. So my last question will be, how's your the rest calendar looks like for this year? What are the events? What are the ventures you are part with, or what are the locations you will be visiting?
Yeah. Well, I hope to see you and anybody who wants to meet. So I'll definitely be in Korea for Korea Blockchain Week. Big fan of Korea. I thought Seoul was a very, very interesting place. If you get a chance and you go, also look at Seoul as a city, and do some sightseeing and incredible historical sites to see there. And then I'll go to Token 2049 in Singapore. Also probably hosting a nice side event there. So we'll post that on LinkedIn. Happy to host people. And then I will go to Buenos Aires for DevCon as well. That's currently my travel schedule on the Web3 side. And so, yeah, I'm sure there might be things that come up here and there. Right now I'm in Germany. I'll be in London soon, and then I will actually be back in Dubai, where I'm based and where I live, back in early September. So I'll probably try and also engage a little bit in the region, but don't know exactly how yet.
Definitely, definitely. We'll definitely meet you at Singapore or Korea Blockchain Week. We'll try to set up a in-depth discussion there also. And yeah, that's all from my side. Thanks a lot for giving us the valuable time, and uh, the mindset which you have is it shows that how market is growing, because this if this mindset is at the top of like investments part, the investors are also they know there are multiple rug pulls, and also people will get to know, okay, you don't need to invest on time on these sort of things, because the higher authorities
Mm.
or the people who are looking on funds and everything, people are also judging that. So yeah, thanks a lot for this time and opportunity. We'll love to connect with you in Singapore.
Sounds great. Thank you so much for having me and for the great questions.
Thank you. Thanks a lot. Bye bye.
Thank you.